Good morning, good morning, good morning. Grand rising, grand rising, grand rising. Today is December 11th, 2025. And we are here for another show. This is the pre-market mantra. This is where I give my pre-show mantras to just set the mood and set our day. Peace, blessings, financial freedom. Peace, blessings, financial freedom. Peace, blessings, financial freedom. I deserve to be healthy. I deserve to be happy. I deserve to be rich. I deserve to be wealthy. I deserve to be free. The more you learn, the more you earn. Thereby, the more you earn, the more you learn. I'm a certified Wall Street trapper. I am confident in my abilities to make great investments. The stock market is a machine that prints money, and I am more than capable of operating this machine. Peace, blessings, financial freedom. Let's get started. So yesterday, it was crazy because the overnight markets dropped drastically. Like if you look at NVDA right here, NVDA actually closed at 183.74. And then in the aftermarket, drop. Man, this thing ended up dropping and closing the aftermarket at 181.29. And then in the pre-market today, it dropped to a low of 180.18. So I know Oracle had earnings and they missed. But I was like, Oracle, they're a big part of the data centers. So they actually beat on earnings, but they missed on revenue. And sheesh. So Oracle had closed at 223, and it just fell the whole time in the aftermarket, and it's fell the whole time in the pre-market as well, and it's currently at 192. I'm like, man, did Oracle have that much power? Like, is Oracle that big of a company to be able to pull down the rest of the market? Let's see what these latest updates are. Oracle's remaining performance obligations, RPOs, reached $528 billion, reflecting a 438% year-over-year increase, highlighting strong future demand despite a current revenue miss. Piper Sandler cut Oracle's price target from $380 to $290, while BofA Securities lowered theirs from $368 to $300. Wow. That is crazy. That is crazy. And it's currently trading at 192. So, man. So, that's interesting though. Because is this a good time to get in? Because with those price targets, even though they were lowered, Piper Sandler has the target now at 290. And Bank of America Securities has it at 300. But it's currently trading at 192.50 in the pre-market. So, does that mean this is an opportunity to get in, or should we wait for more downside? Because, I want to compare this to Meta. When Meta had missed on earnings, it fell. Let's see exactly how many days it fell before the recovery started. Okay, so let's look at Meta right here. So this is Meta. This is the day they missed earnings. It gapped down $100, $90. And then it fell for 1, 2, 3, 4, little recovery, 5, little recovery, 6, 7, 8, recovery, 9, 10, 11. So it fell for about 2 weeks before it started recovering. And then it recovered almost to the bottom of the gap before it started falling again. So when we think about Oracle, is it too early to get in right now? And should we wait for... Oh, look at this gap right here. Oh, this previous gap has been filled, so I can delete that. But they're going to have a big gap as soon as the market opens. Because as you can see here, this is yesterday's candle, and this is going to be the pre-market down here. So, yeah. So, just looking at the chart right here. Oh, we got a gap right here. Look at that gap. This gap has been filled. We can take that out. This gap has been filled. But we got this gap. Let me see. See, you always gotta look to the left so you can see where price might go. So this is interesting here. So it did go into the gap on Tuesday, November 25th, but it almost went halfway into the gap. So that's usually what happens. Price will go halfway into the gap and then bounce. But with this much selling pressure, I'm thinking this gap is going to get filled. And then we'll see what happens at this level, 178.30. Because it's going to open up right here at 192. And then it has a gap right underneath. So I'm thinking this is just going to fill this gap today. But we'll see. All right. Let's check out NVDA. So the thing about my show is I like to cover the trillion-dollar companies in the stock market as the main course of the show. But I will talk about breaking news, and I will talk about other companies that are moving the market. So let's just go to our market cap website that has the market caps for the top companies, and we only cover the trillion-dollar companies. So let's check it out. NVIDIA 4.4 trillion, Apple 4.1 trillion, Google 3.8 trillion, Microsoft 3.5 trillion, Amazon 2.4 trillion, AVGO, which is Broadcom, 1.9 trillion, Meta 1.6 trillion, TSMC 1.6 trillion, Tesla 1.5 trillion, and BRK.B $1 trillion. So let's check out our levels on our trillion-dollar companies after this pullback in the overnight market and also in the pre-market. NVIDIA currently at $180.88 with a pre-market low of 180.18 and a pre-market high of 181.56. Apple currently at the pre-market level of 279 with a pre-market low of 277 and a pre-market high of 280. Google currently at 320 in the pre-market with a pre-market low of 317 and a pre-market high of 320.43. It's very close to the pre-market high right now. Let me go back to Apple right quick. So Apple, you can see that they tried to bounce during the aftermarket, and they did actually, because it ended up going down. That first candle and ended up going down to 278, but it ended up bouncing to 279 before it started falling again. And then they opened up at the pre-market low, and it's been making some decent move to the upside since the pre-market opened. Google As you can see, Google also bounced before heading to the downside, and it's also been moving to the upside as far as the pre-market. Okay, Microsoft currently at 476 in the pre-market with a pre-market low of 472 and a pre-market high of 477. You can see how low it opened up here. Amazon currently at 230.64 with a pre-market high of 230.94 and a pre-market low of 228.68. Tesla has a pre-market low of 445.61, currently at 448.75 with a pre-market high of 449.94. Meta currently at 644.23 with a pre-market low of 639.54 and a pre-market high of 646.84. The VIX is currently at 1594. So as you can see, yesterday the VIX was dropping. The VIX is the volatility index. It was dropping, so we felt good about that. The market was going up. But remember yesterday we had the Fed talking too. So once the Fed had said his thing, then the market was feeling more comfortable. But as you can see, the Asian session or the London session, which starts at midnight here in California, the VIX popped at the open, but it's been trending to the downside ever since. SPY currently at 685.30 with a pre-market low of 682.42 and a pre-market high of 686.01. QQQ. Now look how low QQQ started out in the pre-market. QQQ has a pre-market low of 618.85. It's currently at 624.22 with a pre-market high of 625.17. So that's a nice recovery from that monstrous downside open. All right, AVGO currently at 408.38 with a pre-market low of 404.59 and a pre-market high of 409.13. TSM gapped down crazy too, but it is made a nice recovery. TSM has a pre-market low of 301.71 with a pre-market high. It's currently at the pre-market high right now, which is 306.94. And last but not least, the smallest of the $1 trillion companies is BRK.B. You know whose company this is. Warren Buffett, known as the greatest investor of all time. Okay, so pre-market low is 490.38, pre-market high of 491.51, and the current price is 490.78. All right, so we can check out. So on this screen, I have 8 different tickers, and this is where we show everything at the same time. Let me just put these candles in the right places before we get to the news. Yeah, man, this is, the market is so cool because so much stuff happens, and these are the biggest businesses in the world. So it's very cool to see it. Okay, so our first piece of news is from Amazon. This is from Yahoo Finance. Amazon's planned rush pickup service, allowing customers to collect unified orders from online and physical stores within 1 hour. Sourced from a Bloomberg Insider report, the service targets a pilot launch in at least one U.S. metropolitan area by early next year, extending Amazon's recent expansion, like 30-minute Amazon Now deliveries in select cities and same-day perishable groceries in over 1,000 locations. Amid rising demand for instant commerce, this integrates Amazon's brick-and-mortar assets like Whole Foods more deeply, positioning it against competitors such as Walmart's early morning deliveries and Instacart's ultra-fast options. You see that? That's the good thing about being a consumer. When these companies are competing with each other, then they're competing to get our dollars, so they're going to try to give better service than their competitors to get our dollars. So competition is good for the consumer. Okay, so we had another piece of news here. It's from Unusual Whales. So it says the Census Bureau data confirms 34% of U.S. households earned over $150,000 in 2024, a 29-point rise from 5% in 1967, driven by dual earners and sector-specific wage booms in tech and finance. Middle class share, defined as 2/3 to double the median income, hit a record 45% in recent estimates, down 11 points since 1967, as lower-end households face stagnant real gains amid rising housing and healthcare costs. While Bloomberg analysts views this as upper mobility with overall wealth growth benefited most, Pew Research highlights affordability strains, with 1/3 of middle-class families unable to cover the basics in 2023. All right, market is open. Market is open. Let's go. Market open. 6:30, December 11th, 2025. The market is open. So what are we looking at here? We're looking at a lot of red candles. I see a red candle on SPY. I see a big red candle on QQQ and NVDA. Also Amazon, Apple, Google. The only one that has a green candle on this screen right now is Microsoft. All right, let's check out the Fear and Greed Index. Fear and Greed Index is currently at 36, so it's right in the middle of fear. Berkshire is also green. So shout out to Berkshire, shout out to Warren Buffett. Let's check out the heat map at the open. NVIDIA down over 2%. AVGO down 3%. Lilly up almost 2%. Meta down 1%. Amazon down almost 1%. Tesla down a little over 1%. JP Morgan about to break even. Visa up 1.44%. AMD down 2.6%. Oracle, that's what we were talking about earlier, is down 15.5%. Oh man, let's check out the Oracle chart. Yeah, this thing is dropping. It's in the gap. Remember I told y'all in the pre-market, I think this thing is going to fill the gap today. So I don't know if it's going to be a good buy, but I definitely think it's at least going to fill half of this gap. Probably the whole thing, because, yeah, with that type of news, yeah, this thing. Okay, so let's check out our indicator here. With this pullback, everything is red except the year chart. So if you check out the weekly chart, Oracle is down 15% now. The monthly chart is down 7%. 3-month chart is down 33%. It's still green for the year. It's up a little bit over 10% on the year. So it was having a wonderful year until about 3 months ago when it started going down. So basically, it was up over 40% on the year. See, you never know what's going to happen with these stocks. So 3 months ago, Oracle was up 40% on the year. And it's fell. And now it's up barely over 10%. Oh, let's check out our list here. So now when we look at all the $1 trillion companies, everything is red. Except Berkshire and the VIX. The VIX is up. It's over 16 again. It's up over 2% today. Berkshire is up by 0.5%. But everything else is down. Everything else is red. All right, let's check out some more news. Yeah, I thought this was interesting. This is from Market Watch. It says a Taiwanese immigrant who, despite language barriers and minimum wage work at Walmart for nearly 60 years, built a $2 million stock portfolio by age 87 through relentless saving and investing. Her strategy relied on compounding, saving roughly $200 monthly from her 20s onward in the stock market at a 7% annual return after inflation, generated over 90% of her wealth, supplemented by owning 2 homes that appreciated significantly. Key lessons include saving at least 20% of income early, avoiding debt, leveraging real estate and side income, and maintaining patience amid challenges like family disabilities, demonstrating that consistent habits can outperform high earnings for long-term independence. That is impressive. That is impressive. This lady was working minimum wage at Walmart for 60 years, but still had the discipline to put $200 a month into the stock market. Wow. You know, that type of discipline, you got to salute that. You got to salute that. Yeah, man, and I think a lot of people can learn from her that just because you make a minimum wage doesn't mean that you can't find a way to still invest in the market. And as you can see, she was able to buy a couple homes. Like, we don't know at what age she bought those homes, but she started investing in her 20s. And now she's worth multiple millions. So salute to her, man. That's how you do it. That's how you reach financial freedom right there. Okay, our next piece of news comes from Walter Bloomberg. It's about Time Magazine selecting their Person of the Year. Actually, they didn't choose one person this year. They chose the 8 AI leaders, who are Jensen Huang from NVIDIA, Elon Musk from Tesla and all those other companies, Sam Altman from OpenAI, Mark Zuckerberg from Meta, Lisa Su from AMD, Dario Amodei from Anthropic, which is a privately owned company, Demis Hassabis from DeepMind, which is Google, and Fei-Fei Li from Stanford. I actually haven't heard of Fei-Fei Li. I'll have to look her up. But it says those people were selected for driving AI's transformation into a $500 trillion economic force through hardware, models, and policy influence. The selection compares AI to nuclear weapons in geopolitical impact, with U.S.-China rivalries fueling export controls and investments exceeding $100 billion. Yet an MIT study reveals 95% of firms see zero ROI, signaling potential bubble risks. Whoa. 95%? I don't know. Give it some time. While celebrating productivity gains like enterprise tools quintupling GDP, the cover omits non-U.S. figures like Baidu's Robin Li amid China's open source advantages and highlighting warnings of 20% unemployment and AI-induced medical health crisis affecting 500,000 users. Wow. So they all got to share that cover. Okay, this is from Market Watch. It says, this is a personal finance column featuring a 55-year-old single woman earning $78,000 annually in Oklahoma who received a $10,000 gift from her mother amid her $76,000 in debts and only $4,000 in savings. The expert advises her to use the funds to pay off $1,000 in 23% credit card debt, apply $5,000 toward an 8% car loan, expand emergency savings to $4,000, and direct the remainder to boost her 401k contributions, including $7,500 catch-up limits for 2025. This approach yields a risk-free 8% return by eliminating high interest debt, outpacing typical 6 to 8% 401k gains, while retaining her 3% mortgage below the current 6.2% average rate, and harnessing compound interest for retirement security. So that was an example that Market Watch gave us about somebody who makes good money, almost $80,000 per year, but she was in tremendous debt. She was almost in as much debt as she makes annually. And she was able to get a gift from her mother of $10,000, and the expert advised her on what to do with that money to best suit her needs. Okay, let's check out the heat map. The heat map is showing that, let me refresh. NVIDIA down 2.73% to, oh no, NVIDIA down 3%. The heat map is not updated the same way my watch list is over here on the right side of the screen, so let's go by that. NVIDIA down over 3% at 178.17. Apple down over 0.5% at 277.26. Google's down almost 1% at 317.06. Microsoft a little over break even at 479.02. Amazon a little bit negative for the day at 231.42. Tesla is down almost 1.5% at 445.73. Meta is down a little over 0.5% at 645.91. The VIX is up almost 2% at 16.07. SPY is down a little bit, almost 0.5% at 685.20. QQQ is down almost 1% at 622.21. AVGO is down over 3%, down $12 at $400.42. TSM is down almost 2% at 304.43, and Berkshire is up almost 1% at 494.44. As you can see, most of the technology stocks are going down. Even the ETFs are going down, but Berkshire is standing strong. Shout out to Berkshire. Okay, do we have more news? What else did I want to do? Oh yeah, I wanted to use this little thing here on the chart. So I'm using TradingView to do my charting. So they have this little symbol here that gives some updates. So I want to use it for each of these companies that we're going over. So we'll start with NVIDIA. Latest updates. Chinese authorities warned NVIDIA about possible security flaws leading to limits on local chip purchases. Additionally, China banned certain U.S. H200 chips amid national security reviews. Next part is NVIDIA is a key player in AI surge, boosting the S&P 500 index in 2025 with strong earnings and rising demand for AI technologies. NVIDIA stock fell 1.5 to 1.9% in the after hours yesterday, impacted by Oracle's weak earnings and lowered sales forecasts, raising concerns about high valuations in the AI sector. So I was right. Oracle is such a player in AI that when a key AI player falls like the way it did, it can break down the whole AI market. All the AI companies, they've been affected by Oracle because they missed on revenue. So that's pumping some fear into the market. You can see Apple falling right here. These first two 10-minute candles are very red. Let's actually go to the 1 minute chart so you can get a better view. Yeah, this is nothing but downside on Apple. Now let's check out these updates here on TradingView. Okay, IDC forecast a 6.1% global rise in iPhone shipments for 2025, boosted by strong iPhone 17 sales. Q4 iPhone sales in China are expected to grow from 9% to 17%. In June 2025, Apple changed its App Store after a $500 million euro fine for restricting app developers from prompting cheaper deals outside the platform, impacting trading of Apple. Damn, they had to pay $500 billion fine because they were restricting app developers from promoting cheaper deals outside the platform. Yeah, Apple, man, Apple don't play fair, man. They end up getting that fine, but that fine ain't nothing because they are $1 trillion company, over $4 trillion. But nah, I can't even say that's not. That is a crazy fine. That is a crazy fine. I can't even say that's not a crazy fine. That's a $500 billion fine. No, I'm tripping, bro. I'm tripping. That is a $500 million fine. That ain't nothing to Apple. My fault. That ain't nothing to Apple. This is a over $4 trillion company. You know what I mean? Only two in the world is that. And they got fined. That's how it be. Like, these companies are so big, they will do shady stuff just because they know the fine is not going to affect the bottom line. The company is so big that it doesn't even matter that they got fined $500 million. They make $100 million every quarter in profits. All right, Apple faces challenges from DRAM prices expected in early 2026, which may pressure profit margins and limit price cuts for older iPhone models due to higher production costs. Apple's Tim Cook urges lawmakers to rethink App Store Accountability Act. All right, before we go to Google, let's check out some of these other news topics that I saw. Yes, Nintendo stock hit by rising memory chip prices. Nintendo shares plunged 4.7% yesterday, wiping out $14 billion in market value and hitting the lowest level since May, following declines in 7 of 8 December trading days. Surging memory chip prices, including 41% hikes in DRAM and 8% in NAND, expected through 2026, fuel investor fears over elevated production costs for the Switch 2 console. Despite robust early Switch 2 sales, analysts warn potential pricing pressures or discounts could erode margins, echoing 2021 chip shortages that disrupted global supply chains. So the same way Apple was affected by the DRAM hikes, Nintendo was also affected. Oh, so this is from the master investor Ian Dunlap. He had this. He posted this guy's interview with Rogan. It's I like it very much, and check it out.
Life is just one day. You born in the one day, and you live in the one day. You die in the one day. Everything happening in the one day. Today is only your life. Yesterday is already dead. Too late. Tomorrow is not born. Too early. What you have is today. Today is the only life. Therefore, we need to make enjoy or happy every day, not next year. You don't say me, I want happy life. That's illusion. Don't say me, I just want to say, I want happy day. Once you have a happy day, I think you have a happy life. Listen to this.
That was some real game right there. That was some real game right there, man. Yeah, I'm going to let that breathe for a minute. Yeah, that was some real game right there, man. You just got to focus on the day, man. Focus on the day. Just make every day a good day. And by doing that, you'll have a good life. But trying to look too far in the future, like you got to look because, you got to have a plan. But it's like the large goals and then the small goals. So he's saying that, man, each day, make it a goal to have a good day each day. You know what I mean? And that way you can reach your larger goals of having a good life. Yeah, salute to bro. He might be a monk or something. I don't know. Alright, this is from Walter Bloomberg. U.S. September 2025 trade balance. Oh yeah, this was shown here. Forex Factory. Goods trade deficit 78.99 billion, and services surplus 26.16 billion. Exports rose 3% to 289.31 billion from 280 in August, and imports up 0.6% to 342 billion from 340 billion in August. Okay, this report freshly renews the U.S. September 2025 trade data from the BEA, showing a goods and services deficit of 52 billion. Narrower than the expected 63.1 billion, thanks to exports surging 3% to 289 billion, while imports edged up to 342 billion. A key positive: the U.S.-China goods trade deficit shrank to 15 billion from 16.9 billion in August, alongside a 6% drop in capital goods imports to 87.3 billion, signaling reduced reliance on foreign machinery. Crude oil imports prices dipped 3.3% monthly to $62.07 a barrel, down 13% yearly per Census Bureau figures, which could support lower energy costs and contribute to cooling inflation amid global abundant supply. All right, let's give a quick check on our big list of stocks. And let's see. SPY is down almost 0.5% to 683. QQQ down over 1% at 619. Apple down almost 1.5% at 274.85. Amazon down over 0.5% at 230. Google's down almost 2% at 314. Meta is down almost 0.5% at 647. Microsoft is almost at break even at 478. NVDA is down almost 3.5% at 177. Tesla is down almost 2% at 442. AMD is down over 4% at 212. Bitcoin is down almost 3% at 89,500. IBIT is down over 3% at $50.83. Ethereum is down almost 5% at 31,063. BMNR, Tom Lee's joint, is down over 5.5% at $38.10. Palantir is down over 3% at 181. Hood is down over 6% at 127. I might have to buy some Hood. We're going to pull up that Hood chart in just 1 second. Grab is down over 1% at 511. XLG is down over 1% at $59.08. And AVGO is down over 3.5% at $398.07. Okay, let's go check out Hood, because I do want to buy some Hood shares. I've been waiting for a discount. And let's see if we are okay at 20% off. Ooh, I might want to buy that thing right now, bro. So basically, it's about 17.5% off right now, because it's right in the middle of 15% off and 20% off. Oh, I do got this gap right here, though. This gap is gonna bring it closer to 25% off. Yeah, I might wait, man. I don't think it's gonna go to the gap today. Yeah, no way. It's already down. It's already down. Yeah, it's already down almost 4% today. It's not going there today, but yeah, man. Hood looking good for the discount. Hood looking good for the discount right now. I mean, you never know. It might be red all day, and it might flush. It might hit that 20% off. I don't think it's going to go into the gap, but it might hit that 20% off. Let's see, how much more do we need to go from here to 20% off? Oh, we needed to go down another 2.5%. Yeah, I don't know if that's going to happen, because that will be over. That'll be about 6% off on a day. So yeah, I don't know if it's gonna go there, but yeah, Hood is definitely on discount right now. It's definitely on my watch. All right, let's check it out. What else? Okay, speaking of Hood, I did see this tweet from Vlad Tenev, the Hood CEO. He says, every few decades, the country reaches a point where old assumptions lose their force. Institutions feel brittle. New structures want to form. This period feels like one of those hinge moments, and tech has a responsibility to build with that in mind. Yeah, I definitely think the old assumptions of life before AI are losing their force, because AI is taking over. This is the AI revolution. So you have to be part of it if you want to make money. I just got a notification on my TradingView that the company Lowe's just got a buy. So let's check out Lowe's and see what it's been doing. Oh, it gapped up overnight. So while all the technology stocks were falling in the aftermarket and in the pre-market, look, Lowe's gapped up. Let's check out Lowe's on a daily. Okay. Lowe's has been running since it bottomed out on Tuesday, November 18th. It's been running very nicely. Let's actually check it out. So in the past 23 days, Lowe's is up 14%. Wow, that's nice. As you can see, this looks like a bull flag. And let me point it out. So this is the flag, and then this is, no, that is the pole, and then this is the pole, this first blue line, and then this is the flag here. So a bull flag is a very bullish chart pattern. So as you can see here, it runs up and then it pulls back, and then once it broke, that thing is running. I do have a monthly level here at 255. So based on what I see on the chart here, I'm expecting it to at least make it to our monthly resistance level here. So once it hits this, it may bounce back. It may run up here and then bounce back to this before trying again, before eventually breaking out. So that's what I see with lows, and that's that. But yeah, back to hood though. Back to hood. Hood. Okay, so when we go on a bigger time frame, now we're looking at the daily chart on hood, and now you can see that gap that I was talking about from the other chart. See, this gap is right here. The top of the gap is at 120, or it's actually at 121, and the bottom of the gap is about 117. So it is going to form a gap down today from yesterday. So this was looking like a potential bull flag, as you see the pole here. Potential, which would have, we would have been looking for this, but it didn't happen. So it was a potential bull flag that ended up not happening. So just because it's a bull flag setup, that doesn't mean it's actually going to happen. So, yeah. So I just wanted to show y'all that based on the setup we saw on lows. Okay, what else can we check out? Let's check out the sectors. So with this AI technology sector getting destroyed today, XLK is down almost 2.5% to 145. The rest of the sectors are, well, a lot of the other sectors are running. So XLY, it's a little bit over break even at 119.91. XLC is a little bit under break even at 116.98. XLF is up almost 1% at 54.38. XLV is up over 0.5% at 152.97. XLP is up over 0.5% at 78.76. XLE is down almost 0.5% at $46. XLU is up over 0.5% at $42.95. XLI is a little bit under break even at $155.93, and XLRE is a little over break even at $40.68. Okay, and let's check out some ETFs. So the Dow Jones ETF is up almost 0.5%. SPY is down almost 1%. QQQ is down almost 1.5%. IWM, which is the Russell 2000, is down a little bit, under break even. SPYG is down over 1%. SOXQ is down over 3%. QQQM is down just like QQQ, almost 1.5%. TQQQ is down over 4%. SOXL is down over 9%. SOXX is down over 3%. SMH is down almost 3%. XLG is down over 1%. IVES is down almost 3%. SPYI is down over 0.5%, and QQQI is down 1%. Yeah, it's a lot of fear in technology. With Oracle doing that, man, Oracle straight up. When one of these big AI companies take a big hit like that, then it affects all of them. And this is an example of that. Because I got everything down. All the big dogs is getting hit, man. NVDA. Oh my goodness. Microsoft bouncing back though. Microsoft is positive. Meta turned positive, okay. Berkshire still positive. But everything else is super red. What was another thing I wanted to look at? Oh yeah, I had this got a couple from Instagram here. 19 Keys. Shout out to Keys, man. Oh no, before we check out Keys, we gotta check out Kevin Durant. Kevin Durant, his investing repertoire and portfolio is just so phenomenal. Check it out. KD invested in WHOP Series B in 2027 when the company was valued at $100 million, and now they're valued at $3.6 billion. That's a 36x return. Salute KD. That is incredible, man. That's what happens when you have the ability to invest in companies before they go public. You have to be an accredited investor. You have to have a certain amount of net worth, not including your home. And, KD, one of the greatest NBA players of all time, he got that bag. So he's definitely an accredited investor, and he's been doing his research. And shout out to his financial advisors for giving him that game that investing is the way to go, how to build generational wealth. And he's definitely doing it. So he got a lot more investments. Let me get to it. Robinhood. He invested in Robinhood in Series D round in 2018 when the company was valued at $5.6 billion. And now they're valued at $119 billion. That's a 21x return. Salute to KD if you're getting that Robinhood, man. Acorns. I remember the company Acorns. That was one of the first stock platforms that I ever used it was in 2018 when I first started investing. Well, I started investing 2017, 2018. But KD invested in the company while I was using the platform. KD was like, man, this is the future. Let me invest in a platform. So, yeah, man. KD invested in the Series B round in 2018 when the company was valued at $150 million. And now the company is valued at $2 billion. That's a 13x return. Man, KD is cooking. But we got more. Let's go. KD invested in DraftKings in a Series D round in 2017, valued at $1 billion. And now the company is valued at $17 billion. That's a 17x return. Coinbase. KD invested $250,000 in Coinbase in the Series E round in 2018 when the company was valued at $8 billion, and now they're valued at $75 billion. That's a 9x return. Let me do the math for that $250 million. Since the other ones we didn't know how much he invested, but on this one we know he invested $250,000. So $250,000 times 9 is $2.25 million. KD invested $250,000 and made over $2 million return on that. Salute KD, man. Salute KD. KD also invested in Postmates in the Series D round in 2017, valued when the company was valued at $170 million, but they were acquired and now they're worth $2.65 billion. Well, in 2020, they were worth $2.65 billion. That's a 15x return. He also invested in Overtime in the Series A round when the company was valued at $40 million and now it's valued at $800 million. That's a 20x return. That is incredible. That is absolutely incredible, man. Salute to KD, man. Salute to KD, man. Yeah, this brother need to sit down with Earn Your Leisure, man. We definitely need 1 hour sit down or more with KD, and we can talk about how he became an investor and how did he get the idea to be an investor? How did he know that investing in companies was good, but investing in startups was even better? Investing in private companies where you can make these monster returns. Man, that is incredible. So, salute KD, man. Salute, man. I'm highly impressed, bro. I'm highly impressed. So, one more clip. Shout out to Neighborhood Nip, man. We gonna end it with that.
Bro, get you some money, you gonna feel different.
Straight up.
You might even, all that other advice I could have gave you, this the short version. You know, get you a couple dollars, man. You gonna feel different. Bro, get you some money, you gonna feel different.
Straight up.
You might even, all that other advice I could have gave you, this the short version. You know, get you a couple dollars, man. You gonna feel different. Bro.
Get you some money, man. You gonna feel different. Salute Neighborhood Nip, man. So that's it. That's it for today's show. The show did go long. We had a lot of news. So I'd like to thank y'all for joining me. We'll bring that 19 keys clip in either tomorrow or next week. But I'd like to thank y'all for tuning in to today's show. The music is brought to you by Matt Rich's 510 AI Music. All those instrumentals in the background were created with Suno AI. On my show, I covered the $1 trillion companies, man, the most valuable companies in the world. You know what they are. It's a red day for most of them today, but it's all good because we up. You know what I mean? We've been invested in the best companies in the world. Shout out to my mentors, man. Wall Street Trapper, Earn Your Leisure, Ian Dunlap, Mark Monroe, Lawrence from BWSO. I mean, shout out to everybody that gave me some game about investing, man. Shout out to Boyce Watkins, man. I took your course in 2017, and that gave me the confidence to invest in the stock market. I wish you had taught me about options back then. I wish you had taught me more than just the basics, but I got to salute you for giving me the basics, for giving me the confidence to invest in the market, because it's truly changed my life, and it's truly changed a lot of lives. The stock market is a place where the rich get richer and the poor get rich if you're invested. You know what I mean? So, you know what I mean? Y'all have a blessed day, man. It's been a good show. Salute. Peace, blessings, financial freedom. We out.